Dear students, good afternoon. I hope Deeper sir has already taken meaning and definition of management accounting. I think you all are familiar because in the fifth sum you have already analyzed in detail. So what do you mean by management accounting? Any accounting system that is useful to management or accounting which helps the management is called as management accounting. Why management accounting was introduced? Because financial accounting and cost accounting couldn't fully serve the requirements of modern management. So only management accounting was introduced. Here you are going to see what are the major differences between management accounting and financial accounting. First one, the purpose of management accounting is to provide information. For whom? To the management. For what? For taking decision. So the aim of management accounting is to provide data in an understandable manner to the concerned management to help them to take a decision. But the purpose of financial accounting is to ascertain the profit or loss and to ascertain the financial position and present it up. So what is the financial position and what about the profitability position, profit earning capacity? That is to be presented to owners, creditors, governments and all the stakeholders. Okay. Second one, management accounting is concerned with or management accounting is futuristic in nature. So it is concerned with the future plans and policies because management always focuses on future. What should happen in the future and what should not happen in the future. So we can say that management accounting is futuristic in nature and it is concerned with the future plans and policies. While financial accounting is historical in nature. Why? Because it shows the history of the past or it shows the historical data. Already the events which are already incurred. So historical data or past data are shown in financial accounting. Third one, financial accounting is compulsory according to Companies Act, according to Partnership Act, etc. We know every organization has to prepare financial statement. It is compulsory. But management accounting is optional. Why it is introduced? There is no any compulsion. Then why to introduce management accounting? To help the management. Okay. Fourth one, financial accounting lays emphasis on accuracy. Why? Because accurate data or past data or already incurred data or incurred cost and incurred revenue are recorded. So it gives more emphasis on accuracy. While management accounting doesn't give more emphasis on accuracy, rather it emphasizes on quick and prompt reporting. As and when required, what is to be given? Information is to be given, report is to be given. Okay, so it gives emphasis on quick and prompt reporting. Fifth one, financial accounting is not based on any rigid principles and policies. There is no any clear-cut principles and policies, but based on the internal requirements of the management. That is, management accounting should be suitable to the internal requirements. It must fully serve the requirements of different levels of management. So there is no any clear-cut rules and policies and regulations. But in the case of financial accounting, there is clear-cut accounting principles and concepts and conventions. You know, accounting, financial accounting principles, concepts and conventions that is to be thoroughly followed while preparing financial accounting. Next one, financial accounting is prepared for a particular period. That is, P&L account shows the income and expense for 1 year. Balance sheet shows the financial position as on a particular period. So there is particular period as on a particular date. So it is prepared usually at the end of the year and for a specified period. But in the case of management accounting, there is no specific period. When it is to be given, as and when required. It can be monthly, quarterly, yearly or whatever be. We know that as and when required, accounts are to be prepared, information are to be prepared and provided. So there is no any prescribed period or prescribed time. Next one, management accounting has wide scope. Scope of management accounting is very wide because it includes, I hope you already dealt with that. Management accounting includes financial accounting, cost accounting, statistics, tax accounting, then economics, all these. So it is a wide subject. While financial accounting has only limited scope. It is a narrow concept or it is a narrow discipline when compared with the management accounting. Then Management accounting is meant for whom? Internal parties. Who are the internal parties? Management. Management are the interested parties, or they use the data. They are the users of management accounting data, that is internal parties, that is mainly management, because management may not understand the technical language of financial accounting. As when we prepare file accounts and present it as such, they can't understand. So we know that data is to be converted into meaningful manner. You analyze ratio analysis, etc. So we know that the main users are internal parties, that is mainly management. While financial accounting is meant for external parties, that is interested parties or stakeholders. Are stakeholders അല്പനകക്ഷികൾ ആരൊക്കെയാ? Creditors, employees, shareholders, government and financial institutions, etc. Because they want to know in detail about the financial position, trading position, etc. On the basis of only they will determine whether to give loans, whether to supply raw material, etc. So it is mainly focusing on the external parties are the users. Okay. Next one, management accounting auditing is not compulsory. It is an optional subject, it is an optional discipline. There is no any legal compulsion, so there is no any legal audit required. But in the case of financial accounting, auditing is a must. Audit is compulsory. Audited P&L account, audited final statements are to be published and are to be presented for computing the income tax, etc. So it is compulsory. Auditing is compulsory. Next one, in management accounting, we know that how to value stock. We know that in the case of financial accounting, stock is valued at market price or cost price, whichever is less. I hope you know market price or cost price, whichever is less. In the case of management accounting, no such principle is followed. Suppose if they depend upon marginal costing, stock is valued at a marginal cost only. If they follow standard costing, so there is no any such a principle that are followed in the case of financial accounting is not followed. So we can see that management accounting is a new discipline designed to serve the requirements of the modern management, on the basis of which they can undertake the managerial functions. Okay. Next, let us see what are the differences between cost accounting and financial management accounting. We know what do you mean cost accounting? Accounting for cost, ascertaining the cost and recording the cost for the purpose of cost control and cost reduction. So the aim of cost accounting or purpose of cost accounting is to ascertain and control the cost of product or services. But the aim of management accounting is to provide information to whom? To the management. For what? For planning, controlling and decision making. Three major dimensions of management: planning, controlling and decision making. For that purpose, recorded data to be given in the recorded time, in the recorded manner, that is in an intelligible manner or understandable manner. That is the object or purpose of management accounting. Second one, cost accounting includes only cost ascertainment and cost control. Cost ascertained and cost control. When we control, comparing actual cost with the predetermined cost, then they are evaluating how the performance was good or bad. That is only. But in the case of management accounting, it includes, or the scope of management accounting is very wide. I have already mentioned management accounting includes financial accounting, cost accounting, tax accounting, statistic, reporting, management information system, etc. The scope of management accounting is very wide. One area of management accounting is cost accounting. Okay, next one. Cost accounting use only quantitative data or quantitative information. Those information which can be quantified, which can be measured in monetary terms, that only find a place in cost accounting. But in the case of management accounting, not only quantitative data but also qualitative informations are also considered. We know that management has to perform the managerial functions in the most efficient manner. So they require not only quantitative information but also qualitative information. For example, relationship between subordinates and employees, relationship between manager and employees, relationship between morality of the employees, all these. So quantitative aspects also find a place in management accounting. Next, management accounting deals with both cost and revenue. Cost and revenue, cost benefit analysis only we can undertake. So cost and revenue are both considered in management accounting. But in the case of cost accounting, mainly cost accounting deals with the cost ascertainment and cost control, and it is not related with revenue. Next, cost accounting uses both historical data and present data or current data, past data and present data. So it is historical as well as current data is also used. While in the case of management accounting focuses on futuristic data, because management accounting is concerned with the transactions or events which are occurring in the future. What should happen in the future? What should not happen in the future? So it is concerned with the planning and forecasting the future plans and policies. Next, management accounting starts with the starts where cost accounting ends. Where cost accounting ends, there starts the function of management accounting. Why? Management accounting uses both financial data and cost data, on the basis of which only they can analyze the performance, control the performance, and undertake reporting and taking remedial actions. Okay, we know that management accounting, financial cost accounting precedes management accounting. Management accounting മുന്നെയാണ് കോസ്റ്റ് അക്കൗണ്ടിങ് തീരുമ്പോഴാണ് അവിടെ മാനേജ്മെൻറ്റ് അക്കൗണ്ടിങ് വരുന്നത്. ഓക്കെ.